Bitcoin at 2 trillion market cap is completely irrelevant for nation states being able to engage in war. We live in a world where there's about 1 quadrillion in total assets. So it's like 1,000 trillions. The US bond market is 36 trillion right now, 37 trillion. Global sovereign bond markets are, tens and tens of trillions, maybe 100 trillion. Global money supply is over 100 trillion. Bitcoin's a drop in the bucket, but it's at its current scale, it has very little impact on nation states. Nothing short of being like 10 times or more bigger would start to affect that.
We are witnessing the slow collapse of fiat money. Central banks aren't just fighting inflation, they're actively funding governments, bailing out bond markets, and financing endless wars. Every crisis becomes an excuse to expand the balance sheet, and the result is always the same: devalue the currency, preserve the regime. This is the hidden cost of empire. From the US to the UK to Japan, the system is rigged to keep credit expanding, even if it means sacrificing the long-term value of your money. As Lyn Alden brilliantly explains, this isn't just bad policy, it's the design. Fiat currency is backed by nothing but political necessity, and when that necessity includes war, the printing press goes into overdrive. That's where Bitcoin enters the equation. Scarce, borderless, immune to manipulation. At just a $2 trillion market cap, it's still early, but don't mistake early for weak. According to Alden, once a critical mass of people choose Bitcoin over fiat, it begins to undermine the very foundation of state power, seigniorage, and control of money. The world doesn't need Bitcoin to start a war, but it may need Bitcoin to end the era of endless debt, endless inflation, and endless conflict. Let's dive into Lyn Alden's most urgent insights and why Bitcoin's next 10x is not just inevitable, it's overdue. Before we dive in, hit like, subscribe, and turn on notifications, because what you're about to hear isn't hype. It's a clear-eyed breakdown of how the fiat system ends and how Bitcoin takes its place. Thanks for the support, and let's dive right in.
In the modern age, the foundation of what fiat currency is the liability of a central bank. They're the foundational ledger that they currently run on. And they obviously control the size of that ledger. They normally increase it. They can occasionally decrease it. And so that's kind of their first purpose. And then the second purpose is they want to run that own ledger themselves rather than rely on a ledger they can't control, like gold or Bitcoin or something. Because if there's a problem with the amount of debt units in the system, then rather than letting the debt units go down, which can include government bonds, instead of letting them default or otherwise have a disorderly thing, they just print more units. And so that's still a key thing, is funding the sovereign. And we saw it, as recently as 2022, during the UK gilt crisis, they had a major problem with their bonds. And the central bank, Bank of England, they had a speech plan about balance sheet reduction, and they literally canceled it and increased their balance sheet to fix the bond market problem. And then, that was a temporary thing. They eventually went to balance sheet reduction after they kind of cleared the leverage out of the system and kind of bailed it out. But the point is they can step in whenever there's disorderly bond issues. And they can kind of choose what is the release valve going to be. If the government's spending too much money, they can let yields go up. They can let kind of the bond vigilantes and supply and demand kind of, flail in the wind for a while. If it becomes too much of an issue, then they can step in and say, well, now we're going to put some of the release valve into the currency itself, because we're going to suppress yields. We're going to, print more base money to buy bonds, whatever they want to do. And so it gives them a lot of flexibility, which I argue is not a good thing. But that is, from their perspective, that is, one of the reasons they exist. And another thing is that they would deny that. So most central bankers, if you ask them, is one of the reasons you exist to fund the sovereign, almost always they would say no. It's an uncouth thing to say. Maybe some retired central bankers tend to be a little bit more flexible with how they say things. Yeah. Not all of them, but some of them. So they would deny that. They would go on about how they're trying to run stable monetary policy. They want to make prices gradually more expensive year after year. And that's kind of their purpose. But, behind the scenes, funding the sovereign is one of the apps, like the top 2 or 3 things that they do. Well, before the kind of the modern era, so the post-global financial crisis, they weren't necessarily funding the sovereign too much. Basically, after World War II ended, there's this long stretch where we didn't really have a lot of central bank directly funding of the government. Instead, it was more like managing these private sector credit things. Now, the big criticism is that they cause those cycles as well. They're not just so anything has cycles to it. So even without a central bank, cycles do come and go. There's just kind of human herd behavior that happens and momentum shifts and things like that. But then from their perspective, they're trying to kind of be counter-cyclical. They're trying to like stimulate during a downturn and kind of hold things down during a bubble. With the problem that their actions generally lead to the next bubble. So for example, after the dot-com bubble, well, actually in the middle of the dot-com bubble, when long-term capital management had an issue, they provided liquidity into the market. And then in addition, it was the upcoming Y2K issue, which is now 25 years ago, but people worried about clocks, hitting 99 and going to 0 and causing an issue. So they were worried about outages and stuff. So they front ran liquidity into the market in the late 1990s. And that contributed to the dot-com bubble on the upside, combined with the exuberance of new technology and everything else. So they weren't the only cause, but they just poured some gasoline onto the already raging fire. And then as the recession happened and as the dot-com bubble melted and everything, in something like 2001, they came out and cut interest rates all the way down to 1%. And they inflated a property bubble, which then blew up, 7 years later. And so they end up being more pro-cyclical, I would argue, than counter-cyclical. I think a lot of it is the sacrifice of the long term for the short term, which again they wouldn't agree with. But basically, they're always kind of putting out the current fire. So it's like if there's a recession, it's like the main thing is get out of the recession. If it's too hot, it's like suppress it. And basically, what they're always trying to do is make sure that total credit keeps going up. In my recent talk at the Bitcoin conference, I point out that in like 100 plus years of history, there's only been 5 down years in the amount of total credit in the U.S. 4 of them were in the Great Depression. One of them was a 1% drop in 2008, and they just find that completely like impossible. So they just jump in and make sure private credit's always going up, or the combination of private and public credit's always going up. So they're always trying to like pull forward stuff from the future. They're always trying to like, well, don't stop consuming because that's bad for the economy. It's like keep consuming. If consumption is too low, keep consuming. It's this kind of treadmill that they're always trying to keep the economy on. They would argue that the net positive that is good, that the economy is faster because they're doing this, even they might have some flaws. Whereas critics, and I'd be more in the critic camp, even though I do try to steelman their argument to make sure I understand it, but the critic camp would be that it's more detrimental than not. And I think it ultimately comes down to most economists don't think that price controls are good. That the market should set prices, and what central banks do is they set the price of credit, and kind of more fundamentally the price of money, but basically the price of credit. And so their decisions, a small group of individuals, has rippling implications for the entire market. And every time they're wrong, that can affect millions of people. It's price control, the most important thing.
For over a century, central banks have quietly financed the ambitions of empires, not through taxation, but through inflation. When governments go to war or run massive deficits, they don't ask citizens to pay directly. They simply expand the balance sheet. The result is the same. Your savings lose value while sovereigns grow stronger. As Lyn Alden explains, modern fiat money is not neutral. It's engineered to fund the state, no matter the human or economic cost. But most people still don't realize the full price of this system. Every dollar printed erodes trust. Every rate cut or bond rescue widens the wealth gap. Fiat rewards debt, punishes discipline, and fuels endless war. And that's exactly why Bitcoin matters. It isn't just an investment. It's a rejection of monetary manipulation. A lifeboat in a storm of global debasement. And as more people wake up to the lie of fiat, that quiet escape will become a mass exodus. Bitcoin's fixed supply and decentralized nature make it the only monetary system truly immune to the endless cycle of printing and manipulation. Unlike fiat, it can't be weaponized to fund wars or bail out failing governments. As central banks double down on printing, Bitcoin quietly grows stronger, offering a real, sound alternative for those who refuse to be collateral damage in this global game of currency debasement. The question isn't if Bitcoin will rise, but how soon it will reshape the entire financial order. Let's get back to the video.
Are we still too early in this journey, or what is your sort of belief there?
Oh yeah, Bitcoin at 2 trillion market cap is completely irrelevant for nation states being able to engage in war. We live in a world where there's about 1 quadrillion in total assets. So it's like 1,000 trillions. The US bond market is 36 trillion right now, 37 trillion. Global sovereign bond markets are, tens and tens of trillions, maybe 100 trillion. Global money supply is over 100 trillion. Bitcoin's a drop in the bucket. So right now, doesn't mean it's not solving a problem. I mean, if someone gets locked out of payment rails or they want to hold money that's not being debased, it's serving millions of people. But it's at its current scale, it has very little impact on nation states. Nothing short of being like 10 times or more bigger would start to affect that. Basically, when a meaningful percentage of the population would rather hold Bitcoin than hold a fiat currency, that's when it starts to matter. When it starts actually taking away seigniorage from the nation state, which doesn't happen at a $2 trillion market cap today. That's 0.2% of global assets. You need to start getting into the whole integers, at least. I mean, ideally double-digit integers. So basically, until it's kind of like a new foundational type of money at scale, then yeah, it's a different discussion. And these things inherently take time. But you're going against an absolutely massive network effect. This is both a self-sustaining network effect, and then it's also a nation-state endorsed network effect. So it's absolutely massive. And this like open source network has to bootstrap from zero, and to the extent it's successful, it's going to take a very long time, and it can even take so long that people have to just kind of grow up with it, and it's around rather than making the active decision to transfer to it. One thing I like to reference is Jeff Booth. He often phrases things as if Bitcoin stays decentralized and secure, which is basically, so we're 16 years in this technology. It's been tested in multiple ways. It's very anti-fragile, but it's not necessarily invincible. So to the extent that Bitcoin as a network is not kind of corrupted, captured, neutered in some way, as long as it just kind of keeps functioning the way it has been, I expect it to keep taking market share up to a very high level, because it's as fast as fiat currency, but harder than gold, as long as, again, it continues to operate the way we expect it to. And so I do think that eventually it does eat into major nation state seigniorage, whether it's 100%, like it just completely invalidates the existence of fiat currency, or if it takes like half of it away by basically constraining them more, by giving them a much faster alternative that people can go to. That remains to be seen. We already, the closest thing we have today is like dollarization. So if a country just manages its currency terribly, people dollarize from the bottom up. They find ways to get dollars and other assets, and everyone learns you just can't hold currency and bonds in this country. And so that country massively loses a lot of its seigniorage. And then extreme examples, the nation state itself will give up and just say, okay, we're gonna use the dollar as our currency. That's happened to a handful. Bitcoin can do that to stronger currencies over time when it's bigger and more liquid. So we have a model in place, and we have this kind of long-term incentive to. There's really no reason to hold currency or bonds other than either one as the near-term working capital, like your checking account, basically to kind of pay bills in the current fiat era. It's like a hot potato. You use fiat currency, but don't really hold fiat currency. Or if you're a trader, sometimes it's a volatility reduction. That's why it's still useful, because it's stable, at least developed market currencies. So if you want to reduce volatility, it can be useful. But for the most part, it's not that useful. And as Bitcoin gets bigger and less volatile, it keeps eating into the reasons why you'd ever want to hold fiat currency for more than just a couple months worth of capital. I think, entities like the US and China have more runway than, country XYZ that's a tenth of the size and more externally vulnerable. But the longer this goes on, the more indebted these sovereigns get, and the less kind of reliable the currency is. And then the longer Bitcoin's around and trusted and understood, then the memes start writing themselves. Like, it just becomes understood that holding bonds and currency for the long run is stupid. And you have to hold scarcer things. And then it becomes, okay, what is the best scarce thing to hold? Gold's an option. It's a good option. Equities are an option, depending on what country you're in, what access you have, and what their current valuations are. And Bitcoin is so far an amazing option. It's And so I think those things will eat into currency and bonds. And Bitcoin has the additional advantage, unlike equities and gold, that it can be used for money in the digital age.
We often think of central banks as neutral technocrats, just tweaking interest rates and nudging inflation targets. But the truth is far more unsettling. Central banks are the hidden engine behind every war, every sovereign bailout, and every artificial boom and bust of the past century. Their role is not just economic, it's geopolitical, it's systemic. When governments can print the currency in which they borrow, war becomes cheap. In World War I, the gold standard constrained spending until nations abandoned it to fund mass mobilization. The result? Explosive inflation and global devastation. In World War II, the U.S. financed its campaign through massive bond issuance, underwritten by the Federal Reserve. After that, Bretton Woods gave way to the pure fiat era, and since 1971, the dollar has had no hard backing. Just promises, just debt. And that's the model the world follows today. From the Iraq War to Ukraine, modern conflicts are paid for in advance, by you, not through taxation, but through monetary debasement. Trillions created out of nothing, quietly, invisibly. But the cost is very real. It shows up in the rising cost of food, in collapsing currencies like the Argentine peso, Turkish lira, and Nigerian naira, in skyrocketing home prices and broken social contracts. But fiat's damage doesn't stop with war. It distorts time itself. It encourages borrowing from the future to inflate the present, driving nations, corporations, and individuals into unsustainable debt traps. Instead of saving, we speculate. Instead of investing for the long term, we chase yield. It's a system designed not to preserve wealth, but to erode it slowly and systematically. And most people don't even realize they're being robbed. This is the vice of fiat. It hides risk behind currency walls. It enables short-termism. It empowers unelected central bankers to set the price of money for billions of people with no accountability when they get it wrong. And when they do get it wrong, as they did in 2000, in 2008, in 2020, the consequences ripple through generations. Lyn Alden makes it painfully clear: fiat money isn't neutral, it's not sound, and it's certainly not safe. It is a tool of power, a mechanism to transfer wealth from savers to spenders, from citizens to sovereigns. That's why, in over 600 recorded fiat currencies throughout history, nearly all have gone to zero. It's not an accident, it's the design. Bitcoin changes the game. It cannot be inflated. It cannot be weaponized. It doesn't care who's in office or how many votes were cast. It operates on math, not politics. And that's exactly why it terrifies the establishment. Because if enough people realize what fiat really is, not money, but a slow-motion theft, they'll opt out. And the more they opt out, the harder it becomes for governments to finance the next war, the next bailout, the next lie. We are at a crossroads. Fiat systems are stretching to their breaking point, and the world is quietly searching for a harder truth, a fairer ledger, a currency that answers to no one. Bitcoin is that ledger. If you found this deep dive into Bitcoin's future and Lyn Alden's insights valuable, make sure to hit that like button and subscribe for more expert analysis. Drop your thoughts or questions in the comments. Let's keep the conversation going. Don't miss out on the next wave of financial evolution. Stay informed, stay ahead, and own your financial freedom. Thanks for watching.